While early discussions have labeled Cardano as the next Ethereum killer, the project has since earned a reputation as one of the most divisive in the crypto world. So far, its journey has been marked by soaring peaks, difficult troughs, and an impressive impact on the crypto market. When it comes to Cardano, there is still a huge chunk of doubt. Is it going to fade into the shadows? If there is a silver lining, it had better come quickly. But big news did just hit the crypto market. Cardano ADA and Bitcoin are set to gain institutional exposure as Grayscale recently unveiled crypto indices. Crypto asset manager Grayscale disclosed this announcement. It stated that Grayscale crypto sectors and a new partnership with FTSE Russell, a global index provider, were set to debut the crypto sector indices. The FTSE Grayscale Crypto Sector Index Series is a series of 5 distinct rule-based indices that capture the investable crypto market of Grayscale crypto sectors. This announcement caught the attention of a popular crypto analyst, Dan Garmendello, who elaborated on it on X, formerly known as Twitter. Breaking: institutional exposure is coming to Cardano. Grayscale launches Cardano indices. Grayscale Investments, the digital currency asset management giant primarily catering to institutional players, has just rolled out 5 new crypto sector indices, and one of the indices caters to smart contract platforms. Grayscale isn't new to Cardano. They have already integrated ADA into their X Ethereum smart contract fund, where ADA takes up around 24% of their fund. This move was a clear nod to Cardano's potential as a heavyweight in the smart contract arena. Now, with the introduction of these crypto sector indices, the door could be wide open for institutional exposure to Cardano. We are talking about big money, big players, and big validation for ADA. He added that it was clear that institutional wave is coming for more than just Bitcoin, and Cardano, as blue chip crypto, is poised to ride that wave. The crypto sector indices are divided into 5 categories: currencies, smart contract platforms, financials, consumers and cultures, and utilities and services. It also coverages over 150 protocols, which will be released quarterly to showcase the dynamic nature of the crypto asset class. Meanwhile, the FTSE Grayscale Smart Contract Platforms Crypto Sector Index included crypto assets that serve as the baseline platforms upon which self-executing contracts are developed and deployed. So the crypto analysts believe that with the introduction of this crypto sector indices, the path could be clear institutional exposure for Cardano. In an accompanying post, Grayscale Investment CEO Michael Shoninson noted that investors have increasingly expressed interest in diversifying beyond Bitcoin and Ethereum. This is indeed a green light as an institutional wave is coming for Cardano. Perhaps this could be the big thing that we've been waiting for. Also, after a Q2 2022 evaluation, Grayscale disclosed the amended fund component weightings for each product. In a press release, it stated that it had trimmed the portfolio of the digital large cap fund by selling portions of the current fund components according to their weightings. As a result of the rebalancing, the digital large cap fund no longer includes Bitcoin Cash, Chainlink, Litecoin, Polkadot, and Uniswap. So far, Bitcoin, Ethereum, Cardano, Solana, and Avalanche are the assets and are the weightings included. In addition, Grayscale announced that it had trimmed the GSCP-XC funds portfolio by selling some of the current funds components with their respective weightings. According to Grayscale, Cardano, Solana, Polkadot, Avalanche, Polygon, Cosmos, and Algorand make up the fund's components of the GSCP-XZ fund. These metrics are equally important. Through a market cap weighted portfolio created to follow the smart contract platform Select EX Ethereum Index, Grayscale Smart Contract Platform X Ethereum Fund aims to give investors exposure to several top smart contract platforms. Meanwhile, Grayscale Digital Large Cap Fund is targeted at giving investors access to large cap coverage over the digital asset sector. In the Grayscale report, the company added that none of the Digital Large Cap Fund, DeFi Fund, GSCP-XE Fund generated any revenue due to the challenging market conditions in 2022. The crypto asset manager is among the companies waiting for the approval of a spot Bitcoin ETF. More recently, Grayscale is urging the SEC to make a decision quickly. It explained that the long wait for the decision was not just affecting the company, but also the broader crypto market's regulations. Following a court decision that went against the SEC's denial of Grayscale's ETF plans, the investment company sent this notice to the SEC. At the heart of Grayscale's notice to the SEC lies an important question. Why are there different rules for Bitcoin ETFs linked to actual Bitcoin prices than those tied to Bitcoin futures? Grayscale also pointed out that the SEC has taken a very long time to decide on their filing, way longer than the rules allowed. According to Grayscale, it was like waiting hours for a meal that should have been served in 30 minutes. The wait is extremely frustrating. Well, it's up to the SEC to respond to Grayscale. The company is not just looking out for itself, it is also making things easy for the crypto market by challenging the SEC. Other crypto companies are also lined up for approval as well. Cardano ADA has always had a penchant for seeing significant institutional inflow, which would further cement its position as a top cryptocurrency. Last year, ADA faced an inflow of institutional investors to the network, as the on-chain transaction volume experienced a 50 times increase, reaching 69 billion. Increased demand on the Cardano network was most likely connected to the general growth of the network, as its TVL exceeded $300 million. The total market capitalization broke through $40 billion, and the price hit a 2-month high. Well, that was a long time ago. A rapid increase in institutional volume implies the reflection of the increased fundamental value of the project. The beginning of the previous year was filled with so much activity as the developers working on the Cardano network released and actively developed new use cases for the blockchain, like peer-to-peer exchange and EVM-compatible Layer 2. So with constant releases of new solutions on the chain, Cardano becomes more relevant for institutional investments that often look for real value behind projects rather than speculative returns. This year has seen the big blocks flowing into Solana, Cardano ADA, and XRP. These altcoins have emerged as top picks, showing a shifting trend in the crypto market. However, institutional investors have been reshaping the crypto craze this year, with Solana standing out. It has drawn $3.7 million in weekly inflows. Despite the dips, Solana's appeal to institutions is undeniable. XRP is proving its mettle with a streak of 25 consecutive weeks of positive inflows, expressing its resilience in the face of legal challenges. Cardano, on the other hand, is also garnering attention with $6 million in inflows. With these records, these three altcoins have reinforced their positions as favorite choices among institutional investors. However, according to investors, Bitcoin will always gain more traction and attention than altcoins, regardless of the bullish reports. Institutions will always choose Bitcoin first. It is the leading cryptocurrency after all. Last year, there was even a report about a subsidiary of Michael Saylor's company taking up a Bitcoin collateralized loan to stock up on Bitcoin. Michael Saylor tweeted about this, stating that a loan of $205 million was taken to acquire Bitcoin. MicroStrategy, a subsidiary of MicroStrategy, has closed a $205 million Bitcoin collateralized loan with Silvergate Bank to purchase Bitcoin. The Silvergate Bank is a subsidiary of Silvergate Capital Corporation, which is a leader in providing innovative financial infrastructure solutions to crypto fields. It was disclosed that the company will use $205 million to acquire Bitcoin, as well as to pay fees, interest, and all expenditures related to the purchase. So in the eyes of various institutions, Bitcoin will always be a friendly option. There are many coins out there, and they have their uniqueness. Cardano has cards, and if it plays them well, pumps are inevitable. Recently, Cardano's TVL growth on the DeFi landscape stands out, not just for its foundational philosophy, but also for its incredible growth metrics in recent times. The TVL on Cardano recently surged past an impressive milestone of $250 million. With this, it's important to note that the Cardano ecosystem has one of the most actively growing networks in the DeFi arena. However, this TVL record is nothing compared to last year's records. Comparing Cardano's growth to Ergo, another major player in the crypto market, illuminates our minds to see the momentum ADA has managed to garner. While Ergo has its leverages and has shown unwavering growth over the past year, Cardano's pace is undeniably faster. The Cardano chart depicts a steep rise in its TVL, especially around the later half of this year. This implies a surge in interest and investment in the platform. Cardano is set to rise because its commitments to research-driven approaches, peer reviews, and an emphasis on innovation qualifies it as an attractive choice for those who value long-term growth over overnight pumps. Patience is indeed a virtue when it comes to Cardano ADA, and it is highly essential. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.